Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. All right, I've been away. I was back. I was away. I was back. I've been in the room every day, but first day I've really been able to sit down and do one of these in a while. So a couple things. Let's take a step back. We can review. I think the last one of these I did was on like the 14th. So we were back to look. This is the stuff I do for the subscribers every day. Lower low, they had to convert the 50-day, which they did. That put us into a lower band ride. 50 days converted, sub 44s on deck, 4400s on deck. So we went ahead and then we did that. Sub 4400 as discussed, 100 days next. We went and did that. 100-day gets tested. They held it there. That's down at 4350. My concern right now is from 4350, 4372, 4396, you're building higher lows. And right now we're back to testing both the 50-day and the 9-day, which is the blue line there. So where Monday was a day where we were long more than we were short. Yesterday we were basically exclusively short. First from 28.5, and then we kept leaning on the 12 area, which was a really nice risk marker for us. Right now, you've got a couple things going on the hourly chart. Hourly mid-band is trying to hold things in. It already tested the 9-day last night, tested the weekly pivot. So we were short against this hourly to see if we can break the overnight low, which is just a shade under 4,400. So what do the bears need to do? You need to stop giving up higher lows. If this is some longer-term bear flag that wants to break down, that's fine. But you better break it down. You better take out 4350, and you better do a hell of a lot better job with 100-day than you did before. If you do that, then it has some room to come in. You got Jackson Hole Thursday and Friday. Maybe that'll mean something. Maybe that'll mean nothing at all. There's no way to tell. So back to the daily chart, we were on a band ride for a good chunk of time. Flaming sell rallies, which was nice. All the way down from that 45.50 area into 43.50. So it came off a solid couple hundred. So here's your lift up into the 9-day, which is fine. Seals it off, bears seal it off. They've done a pretty good job of executing with resistance where they've needed to. You can see that back at the 9-day here and here. You can see it at the 50 here. So what do the bears need to do? Break the low. Break the low. That's from here down to there, they are noise. They're great for a trade, which is what we did yesterday. But as far as anything is going to turn into some additional leg down in the market, et cetera, that work starts sub 43.50. They have to go below 43.50. What do the bulls need to do? Take out the 50, get back up into the daily mid band, which is up at 44.90, 44.91, and convert this whole thing from a sell rallies tape into a buy dips tape. It's been a really nice sell rallies market. We haven't had a really nice sell rallies market basically in 2023. This one has been very solid. So we went from, the basic, the thing wants to trade between the middle band and the upper band, which is buy dips all the way, to the thing wants to trade between the middle band and the lower band, which is sell rallies all the way. And that's how you have to approach your day. Bottom line. I'm not here to guess about what the market's going to do. The market's going to do what it's going to do when it's going to do it. And that's, during the regular session. And then we react. So yesterday it was pretty simple. Either we were going to convert 30 to 33 as support, or we were going to fail there. So that was a bull bear area. Ended up being a bear. So we come in and we short it. Then you've got the weekly pivot here yesterday that was trying to, they were fighting over a little bit. But as long as that area held, and VWAP was at 12 at the time, then either it was going to convert or not. If it converted, then you want to be long. If it didn't, then you want to be short. That's how you trade. That's how you trade. This is how you analyze a market. But those either or decisions in the middle of the day, that's how you trade. And if you don't get that distinction, you don't get it at all. So for today, where are we at? We got hourly mid there, 44.09. That's the risk marker right now. You got the proprietary moving average, the daily pivot, and VWAP all coming in at 44.11 half. You've got your weekly pivot this week is basically 44.16. So 09 to 16 is that chunk of price that we're going to have to fight over. Not only pre-market here in Globex, but when we get into the regular session as well. So 09 to 16. Below that, then you start talking about yesterday's low, which is, what was it, 96? Yeah, something like that. Sub 96 opens up the low from Monday, but ultimately you have to deal with the low from Friday. So, fine. You want to have a bear flag? Bear flags break down. So the bears need to execute the breakdown of a bear flag. Because I tell you right now, if this holds through the day, if they can't take this out, and this survives the day, and you have your fourth consecutive higher low, and then whatever happens in Wyoming, Thursday, Friday, somebody goes ahead and screams free money forever or whatever, that's going to be used as an opportunity to take it right back up, for starters, to the 50-day and the daily mid-band. So we'll see how it goes. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.